All right, let's talk about the common myth about disability insurance. If I get too sick or injured to work, the government's got my back. I don't need to worry. They will pay me until I'm back on my feet, or I'll just continue to ride on the government's benefits. Well, how much is there actually available, and would it actually be enough? Let's talk about it. There's three main ways you can get government benefits if you get too sick or injured to work. Let's talk about the first one. It's EI. Unemployment insurance, which most people are aware of. If you've been on parental leave or maternity leave, this is the type of coverage that you would be having. There's a maximum there. There's a maximum of 55% of your gross earnings, up to $573 a week in 2020. $573 a week, guys, that's not a lot of money. Okay, that's just over $2,000 a month. If you make more than that, you're going to have a significant loss of your income. It also only covers you for 15 weeks. After that, you have to apply for other benefits if you don't have any long-term disability, okay? Talk about the other, it's also taxable. Be aware, especially even maternity leaves, parental leaves, people get stuck with it. They don't realize it's taxable. So it's highly taxable from the government. But then they say, okay, well, if I'm disabled for longer, I could get CPP, disability, the Canada Pension Plan. And it's true. But here's the thing. It's hard to qualify. By their definition, it has to be long and prolonged and even life-threatening. It has to be a prolonged disability as a condition that will either keep the person from returning to work for at least a year or likely result in your death. That's one of the definitions, okay? So most people have a hard time qualifying for the CPP. Even then, it's to a maximum of about $1,400 a month. And you have to have been disabled for 4 months before you can even qualify. And it's taxable, okay? So again, if you're making over $50,000, $60,000 a year, these two benefits aren't going to do much to keep the lights on, keep the mortgage going, and keep the kids fed, okay? Last one is workman's compensation. So if you work in a high-risk environment, a lot of times there's workers' compensation. Now this pays more. It is 85% of the earnings up to $88,500 in Ontario. There's no waiting period, and it's non-taxable. However, the injury has to happen on the job. I've heard stories of people getting injured while they're technically at work, but you were technically on a break. So technically you're not covered. Okay, so be very careful when it comes to the workman compensation, because if you get injured at home, going to or from work, it does not cover you there, and it certainly doesn't cover you if you get a major illness that takes you down. Okay, it's not related to your job. So those are the three main ways that the government will help to supply some income if you get too sick or injured to work. However, again, those who are higher income earners, there is no way that is going to supply for any type of lifestyle maintenance. So the question to you is, if you were to get too sick or disabled to work, what would you want to keep? Do you want to keep the house? Do you want to keep the car? Do you want to keep going to Costco, or are we only going to No Frills? Right? All of these different lifestyles. Do you want to go to the movies? Or are we ordering in Netflix? Unless the movie theater's open. But it's this idea of what are you planning on keeping in your life if something happens? So there's the myth, guys. The government's benefits are not enough to supply for majority of individuals. Okay? So what we need to do is we need to figure out what gap is there and how can we fix that gap in the most cost-efficient, wealth-building way. Have a great day. Thanks for listening to Disability Insurance Awareness Month. Watch for our next month. We'll see what we come up with. Have a great day.